Hello everyone, this is Andrew McNair from SWAN Capital with our informational economic update for August 2019. In this month's video, I want to share with you some recent headlines that influenced July stock prices, but also provide you some perspective and some insight into what these developments may mean for you over the next months ahead. Now, as always, please stay tuned at the end of this video for some required disclosure statements. The market advanced in July on encouraging news and the anticipation around the Federal Reserve cutting interest rates. That anticipation was continuing to grow over the month of July after Fed Chairman Jerome Powell's mid-month testimony on Capitol Hill. In fact, the S&P 500 gained 1.3% and it passed 3,000 for the first time in history. The Dow Jones rose 1% and the NASDAQ nearly 2.1%. Now, the Fed made a quarter-point cut on July 31st, and Chairman Powell did not suggest that additional cuts were coming. He was really addressing the media when he called the move a mid-cycle adjustment to policy. Some analysts interpret this and think that this Fed cut was really a precaution to keep our economy continually growing. Its latest policy statement actually cited global developments and muted inflation as factors, and those are true concerns. Yearly inflation is still under the Fed's 2% target, and at last look, China's economy was growing at its slowest rate in 27 years. Now, if we turn our focus to trade talks finally resuming between US and China, on July 30th, trade delegates met face-to-face in Beijing for the first time in months. The market certainly wants a quick resolution to these trade disputes. We want these trade tariffs to be over with. That's what Wall Street is seeking an answer to. But the reality may be quite different. It might go on for a lot longer than many people anticipate. In late July, Treasury Secretary Steven Mnuchin commented that it could take a few more meetings just to see really any progress. Now, this month, the Fed and U.S.-China trade relations will likely remain top of mind on Wall Street, especially with Trump putting a pause on the tariffs that he's been talking about. And a lot of focus is going to turn to the Fed's annual Jackson Hole Symposium that starts on August 22nd. This event is really important because central bank officials will come from all over the world and Wall Street will pay close attention to what these central bank officials are going to be talking about. Now, there is some other very recent news that we should talk about, and that's the inverted yield curve. And many times people ask, what does this inverted yield curve actually mean? What it means is that the 2-year Treasury and the 10-year Treasury are nearly identical. And to better explain it, I always love a good analogy. If you were to go into the bank and you're looking at a 6-month CD and a 5-year CD, you would hope that the 5-year CD would pay more interest, right? Because you're tying your money up for a longer period of time compared to the 6-month CD. Well, if the 2-year Treasury and the 10-year Treasury are nearly identical, it's like the 5-year CD and the 6-month CD being identical interest rates. And here's why that's very important. Oftentimes, when they have an inverted yield curve, this could be a leading indicator to a potential recession ahead. So we're going to keep our eyes on the inverted yield curve. We're going to look at the trade disputes and see if we see any resolution in sight. Now, I saved the best for last, and that is that Chick-fil-A is now offering mac and cheese. So if you have discomfort about the economy, you know where to go for refuge. Now, again, that's it for this month's August 2019 Informational Economic Update.